Good weekend, all. Ira Epstein of Linn Associates with your weekend edition of your agriculture update for Friday, the 22nd of February, 2019. Now, we're coming, and I'm right after about approaching 2:15 in the afternoon as I'm recording this. The first thing I've heard is that the vice premier of China is going to stay an extra 2 days in the U.S. to try to wrap things up as best as he can. I've heard that supposedly a currency issue has been resolved where China would be devaluing its currency or letting it devalue, and apparently Steve Mnuchin, our Treasury Secretary, says that it appears they've resolved that. We're hearing that up to $1.2 trillion of goods will be bought by China, but we have not heard what has to be heard on the forced transfer of technology, property rights. I can go on and on. So it's the intellectual property that is still very much open. Is it enough to get the president to sign off on the idea that they will not have a March 1st tariff increase? I think it is. I think you'll find that the president's going to meet with Premier Xi at the end of month. I'm talking end of March at Mar-a-Lago, and they're hoping to wrap things up at that point. But the stock market's not running away on that news. You're just sort of sitting here. Gold and silver have actually sold off since that news was released. The grain market was pretty flat. It's about an hour ago that happened, but a lot of this has been rumored for a while, and energies didn't go very far either. Now remember, on our weekend edition of the Ag Updates, what we try to do is look at the bigger picture. And we start off with a monthly chart, and we'll go to weekly charts after that of the soybeans. So on the monthly chart, you're still having trouble getting up to the 18-month moving average of closes near the 939 level. When we take a look at the weekly bar chart, and you take from the high that you made last March into the July low, you've gotten about a 38% retracement, and the market sort of died there. What I think traders are going to look for, can you get over this high that we had several weeks ago, right here, and that high was 931.25, to say that the market can reach up to the 50% retracement, which on the monthly chart is going to be a resistance point as well. That doesn't mean it just stops there. It doesn't mean it's going up there. It's what it is. We know that China's offering to buy a lot more soybeans, wheat, corn. The question is, with how much we've got in storage, is it enough to make the market lift up from here or not? My weekly reports, I wrote about that. When we come to just plain a weekly chart, this brown line represents what's called a swing line. And it's an indicator that I wrote years ago so that I can easily look at a chart, say, is it trending? And what is the risk associated with the trend? Now, my definition of an uptrend are higher lows, which you've got, and higher highs. That's an uptrend. So I say we're in an uptrend unless prices sink back under $9. Actually, what is this number here? It is at 890. It is 890.75. So unless it sneaks back and gets under that right now, the trend remains one of bullish, because you got the higher highs, higher lows. Where is the market looking for support? I want you to look at the 18-week moving average of closes. I call this that line in the sand. And what often happens is a market pulls back to this number if it's rallied, or if it's broken, it rallies up to it, where it resets itself. It tries to figure out what next is going to happen. And that's pretty much what's been happening here. For the week, we're up 2 3/4 cents. You did come down and challenge this number. That is well above the 890 3/4. And now, if the market can mount a rally, where might it go? Well, one of the potential numbers could be this 942 level, which is the 100-week average of closes. We've already seen on the monthly chart the 939 level, and here is the 936 3/4 resistance of the Bollinger Band. The black lines are Bollinger Bands. They do not run parallel to the 18-day average. They're an algorithm designed to keep the market trading within them. My take on them is the first time you challenge them, it's often an area where resistance shows up. Then if you go back to the 18-day average, what happens, it's like a reset on a pinball machine. If you get up to it again, it's resistance again. And when you fall back to that 18-day average, which I call that neutral number, think of it like pinball. You hit the reset and everything starts fresh. That's pretty much what you've got. Should the market just drop on this chart under 890 3/4, you'd have a pattern of a higher high and a lower low. It would not be a trend. So at this point, the bulls still have control in terms of bias because the market's over the 18-month moving average. The bias is up, the trend is up, and this is an area of resistance. And in terms of momentum, that's the problem. The market is floundering in the momentum. It got up to a level near 80, and it's been since slipping back and just waffling right here. When we come to the meal chart, you are caught in this very, very tight band of the Bollinger Bands where they've gotten extremely, and I want to use that word carefully because it's important, extremely narrow. From there, trends develop. This is if I had to write a book about stochastics, Bollinger Bands and all, in the Bollinger Bands, the narrower these bands get, ultimately you get a breakout. Think of those flash crashes in the VIX that you get where they either spike or drop. Typically they spike up, and they were spiking up because you had a very low Bollinger Band. If you go back and look at them, you'll see how that tied together. So if this market spikes, you have two levels of resistance. First the upper Bollinger Band, then the 100-week average of closes. What if you break down from here? So if you break down and start closing under that band and pushing it down, well, you've got to look way back to see where the market goes, and it's probably into the 280s before you even find any solid support. Who's controlling the market right now? The bears. You have lower highs, lower lows, momentum is down, and bias is down. So until this market can break out of this, the bears right now are in control. And to stop the bears, if you were to just pop up, you've got to get over the 317.40 level, which would put you over that top Bollinger Band momentarily. So bears in control there. In the oil market, the momentum went up and it sort of flattened out here, and you can see, and I do think that momentum leads price. You can see the sideways action. However, what you have now is a pattern of a break low that took out a previous low and a higher high. So the rally that began with the higher lows here and the higher highs ended. You're now, if you will, just flatlining, trading sideways here with resistance in two levels, 30.81 and 31.15, and because you're not trending, support back if it decides to break down at 28.68. I would think just mentally the fact that we're seeing 2 days of extension on trade talks, that's more bullish than bearish for grains as a whole. But you're not seeing that in a lot of price action, I have to tell you that. In the corn market, the swing line has got lower highs, lower lows. It's completely countered because the market finished up over the 18-week moving average of closes, which means the bias is up. In other words, where you close on in the market in relation to the 18-day average acts as a filter for me on my swing line. And right now, I see neutrality right there. I see momentum that has been trying to break down, and you can see that in price starting to flatten out. In terms of the wheat market, this is still very much a market that is in the bear camp. You closed under the lower Bollinger Band. You have been in the process of making a run for the 100-week average. The market broke out, and I want to use past tense. This is that sideways action. Not quite as well defined as we saw in the meal, but it's here. And you could see how the market went up to the upper band. Now it's at the lower band, momentum down, and the market starts pushing on it. Next support zone, if it continues lower, right through here, the odds are the market's going to try, and be it this week, the week after, to get over the lower Bollinger Band, but that doesn't put the market in a trend. The bias is down and momentum down, not the trend. Breakouts often happen with that occurring, and you've broken out to the downside. In the cocoa market, it's been a sideways pattern for a while now. Remember, we were in a downtrend. You went down to the 100-week average of closes in green, held it, popped up, and now you're pulling back. So what are we doing here? A lot of sideways action. In fact, if you look at the bigger picture, right about here, it began with all that sideways, and I still don't see it trending. In the sugar market, this is an attempt at a market to get up to the upper Bollinger Band. It is trending to the upside. You have higher lows, higher highs. You're able to close over the 100-week average, which you got up to last week and ran into resistance at, which means if it can add to this, I'd look for the upper Bollinger Band and not much more than that on this run. run to be where the market runs into its problem. What about support? Well, the support comes in between the 100-day average down to the 18-day average of, not 18-day, 18-week average of closes, and you don't want to see 22.51 taken out if it's going to hold up. Coffee remains very much in the bear camp. You have the lower highs, lower lows. The most you've been able to do off this big break that we had is get back up and fight a battle near that 18-week average of closes, and the market continues down, momentum down, bias down. In the cotton market, still very much in a downtrend. Lower highs, lower lows. It's been a wild, wild week in cotton. You took off dramatically the other day, and you gave just as much up in the daily charts. But for the week, you're going to finish up about 160 points, which isn't bad. The market did get down, challenged the lower Bollinger Band again. I think some profit taking was taken there, but I don't see anything turning the trend of this market around. Cattle on feed report comes out February 28th. I actually thought it was coming out earlier than that, but with the delays of the government, that's the date that they've given us. You've been marking time to the upside. This is still very much on the weekly chart in a bull market. Higher lows, higher highs, still moving higher. The momentum is still locked in friendly, and the bias is up. As we come to the lean hog market, you get down to a key number. Let me show you this. When markets here, lower highs, lower lows, a potential could be the lower Bollinger Band. Remember, we do not count how the stochastic works in overbought or oversold on a weekly chart. Just looking for that for the daily. Market comes back, fights a battle at the 18-week average, and this week just lets go. What else happened? This was an outside week up. When you take out the low of an outside week, markets tend to go to the closest of a key moving average, the 100 days up here, and the 100-week is up here, and the 18-week is here. So if you take out that low, the next number is the lower Bollinger Band, and that's right where the market went, and notice what it did. It bounced away from there. You know, if you're like me, one of the things I go through is I buy services. I buy advisories. You know why? I want to get another opinion. How often have you had a trade in your hand or want to make a trade and you're going, gee, I wish I had somebody or something to bounce that idea off of? In the mornings, that's what I do. Not here. You're not going to see this on YouTube. You're not going to see it in a general space. What I do is I review 40 charts with the idea of helping traders that are looking for that other nudge to help them with their idea of a trade. That's really what this is, a sounding board. So I cover 40 charts, and they look very similar to this in those colors. I am not in this. I speak over my charts, and I'll give you the chart action, what I think the pros are doing. We'll talk very quickly. Technicals, not fundamentals. More in a fundamental, the key report that came out, but it's going to be the technicals because I want to get you to trade ideas. And in that, I'm able to say, buy here, sell there. This is what I think you should be doing. And that's what I'm able to do. And if you think about it, I do it Monday morning through Friday morning. What is that worth to you? Think 26 cents a time? Not bad if you think about it. So what we did is we priced the first 30 days of it at $7.95 because we want you to see, is it worth anything? No, I'm not going to give that to you free because it's worth something. You go to your doctor, he sends you a bill, your lawyer sends you a bill. I don't think these prices approach anything like that. So help us all out. Why don't you look into this? How do you do it? Either call my staff. You can go to our website, and on our website, under the words education or research, go to morning subscriber video. Away you go. $7, take a shot. I'm Ira Epstein.